welcome everybody. Let's talk real estate. Your weekly BS with Barry Saywitz about the current commercial real estate market here in Southern California. As we take a no BS look at both sides of the issues driving this market today to find the best solutions going forward. With our man right in the middle, it's Barry Saywitz. Hey, Barry.
Hey, good morning, Paul, and good morning to all of our viewers and our listeners out there. Welcome back again. It's Tuesday. It's one of my top 7 favorite days of the week, and I'm excited. We're back here again. We're going to talk a little more real estate. We have an exciting show today for everybody because we are approaching very quickly the end of the year, and so what we thought we'd do is something a little bit different, and we do the year in review and look back at some of the guests that we've had and some of the topics that we've discussed and see if we've made any progress in terms of getting a little smarter or more knowledgeable about the various different segments of the market, and then try and do a little prognosticating in terms of what's going forward. So we have no live guest, but we are live. Paul is here with me. We're going to have a little sort of discussion back and forth in terms of where we've been, where we are now, and where we're going. I'm excited. We have, for those who are viewing out there, we have our sort of nondescript reindeer, and
we spared no expense.
Yeah,
for
and
this show.
our tree, which I think can be used for any holiday. It's a bush/small tree, and so we're trying to get festive a little bit. And so, with all of that said, I'm Barry Saywitz, president of the Saywitz Company and managing partner of Saywitz Properties, and we are going to talk real estate. So let's jump into it. Paul, I want to rewind, right? So
Yes.
Here we are, December. Let's go back to January. In January, we started the year with guests on the show. We've had a wide variety of guests.
Amazing. When you pulled out the list today, I was amazed at the diversity and the wide range of experts that you brought in here.
Yeah, and I guess
impressive.
I'll just start by saying I want to thank all of our esteemed guests for coming on the show and taking their time and sharing their thoughts and their views with us. It's we really do appreciate it. But we tried to address various different segments of the market along the way, and we started the year with several different economists. And so we had my good buddy Eric Sussman, who is adjunct professor at UCLA Anderson School, and then he changed colors and switched over to USC in the middle of the year. But we also had Ed Colson, the director for the Center of Real Estate here at UCI. We had Jerry Nicholsberg, who's the director of the Center for Real Estate at UCLA. We had a number of other people from various different economic backgrounds talking about high-level stuff in terms of the economy. And really where they started out, I believe, without putting words in anybody's mouth at the beginning of the year, was we have to wait and see. There is change coming. Obviously, beginning of the year, you see this run-up in interest rates, continued run-up in interest rates. I don't think anybody had a sense of how high it would go or that it would last as long as it has. But here we are in December, and there's no really sign of any relief in the short term at all.
And I think that would have surprised them if you'd asked them. If few of them want to put on their magic hat and look into the crystal ball. They don't want to go on record and make any sort of hard predictions quite often. But
no, tough to pin down an economist.
It really is. But if I just my gut reaction is, and talking before and after, had you told them where we'd be a year later, I think they would have been surprised.
Yeah, I don't think anybody would have picked it. And then the other issue is, I had conversations over the last few days. People say, well, I think lower interest rates are coming. Yeah, when? I mean, it's not tomorrow.
Like it's inevitable.
Not next
Yeah,
month.
right.
And so what that does is if you think it's coming, you just wait and you do nothing. And then that stalls it off even further because you haven't done anything to perpetuate, a change in the economy, which would then cause the Fed to take some corrective action.
And you all mentioned, at least a couple of you did, there was a time in the 80s when interest rates were twice what they are now.
Yeah, it doesn't make anybody feel any better, I don't think, about what's going on today.
But the idea that it can't go any higher is not true. Historically, there has been periods
No,
of
I
time.
think people are waiting on the sidelines because they believe it will go lower.
Right.
The other thing that we see is you still have not had the correction that people anticipated in the residential market or the correction in the commercial market relative to cap rates, or you still see cap rates in the 4s and even low 5s when you have interest rates in the 7s. and approaching 8. And so there is a disconnect there. And then on the residential side, you just haven't seen massive price drops. You've seen less activity. You've seen less people
dramatically less activity.
Yeah, and so there's less deals getting done because people are just sitting on the sideline and go, well, I'll just wait. And so that just a domino effect. It slows down the market, and then you got what you wished for, which is no activity, yields nothing going on in the market, yields no change, right? The increased activity doesn't really happen by itself. Something has to fuel it.
Yeah, and you look at, let's just hit on 3 trends that we've hit all throughout the year. You had a lot of people come in and talk about office markets. Everybody assumed COVID's passed. Companies are already saying, got to come back to work. Everybody wants them to come back to work. You want people to come back to work at your office. Many people talked about, you had, who was the chairman of the Republican Party, Fred
Whitaker, yeah. I mean,
he was saying even at his office, yeah, they want people, he's a big runs a big law firm. And yet, there's a stubborn resistance to that.
Well, so then you have companies that have to adjust accordingly, but you still don't have these global factors in the market that are then going to drive people's mentalities, whether that's business owners or leaders, or whether that's the average employee. So I read a statistic this morning that November was the least amount of job opportunities in the month of November available than there were in the last 2 years, meaning that there are less jobs out there for people that are looking. But what it didn't finish the sentence about was there was also the least amount of people looking, because in December, people don't look for a job.
Yeah, that's true.
Right? People that are out of work, that don't really want to be in work, they sit on the sideline and go, I'm just going to enjoy the holidays. I'll pick it up after the first of the year.
Right.
Somebody who got laid off or fired or whatever, I'll just apply for unemployment and I'll wait till the first of the year. And so you have to take these statistical analyses in a greater scope. You can't just take it in pieces and then extrapolate. I know our governor likes to do that a bunch without picking on him. You can do that, but it doesn't really explain the whole story. And so, when we're talking about different genres, I just want to mention some of the guests that we have. We did have Fred Whitaker, the chairman of the Republican Party, Eric Paulson, the head of brokerage for Kidder Matthews, and Kerry Vandell, the dean and professor emeritus from UCI and real estate professor here on campus. And we've had Jeff Ball, the CEO of the Orange County Business Council, and Diane Pritchett, the executive director of the South Coast Metro Alliance. These are organizations that oversee a bunch of businesses. They are getting input and feedback from other business leaders in the community. And when they came on and we talked high-level stuff, no one was super excited about where the economy was headed. And I'm not sure that any of them would come back today and jump up and down and go, gee, we've made great strides. Right. And so that begs the question, which is, where are we headed for 2024?
Although none of them, I think, would either say, there was a fear a year ago that maybe we're going to have a hard landing rather than a soft landing.
I agree.
So I don't think, there's some disagreement about that still out there in the market. Is more to come? Is there another shoe to fall? But I don't sense people feel there's a big drop coming, nor is there a big boom coming. We just seem to be kind of in this treading water phase.
Yeah, and I think if you talk to a lot of people, they will tell you, if you said hard landing versus soft landing, if you had to pick one, I think most people would say soft landing.
Right.
Because you're not seeing the market completely crash. You're just seeing it sort of putter along. At the same time, if you said to people, you're going to get more of the same or you're going to get the economy to bounce back, I think you'd see most people say, I think I'm going to get more of the same.
Yeah. And yet, if the fundamentals, the things that worried everybody, office occupancy, way down. Housing transactions, way down. Banks cutting back and making loans harder to get and all this stuff, interest rates going up. All of those things would suggest something's going to happen. There's some cause and effect.
Yeah, but I don't think you're going to wake up on Monday and go, hey, guess what? It's back. I don't hear that from anybody. I think it's a slow grind going forward. And then part of the issue is what happens with the lead up to the national elections and where that goes. Because at the moment, I can't speak for the the federal government, but it seems like they're obviously very distracted. There are a lot of bad things going on in the world. There is, who would have thought at the beginning of the year that Ukraine would still have a war, but yet it would never be on the nightly news, right? You don't hear anything about it anymore because Israel and Hamas has taken a front seat to everything,
right?
And that's all you hear about. And then it also takes a front seat to our own economy, right? You talk about the border here. You talk about Israel and Hamas, and there are changes on a daily basis. There are events on a daily basis for those two things. What there's not events on a daily basis is there's no event on interest rates on a daily basis.
Right.
There's no event in terms of clicks up or down in the real estate market on a daily basis, and there is no event in terms of the government doing anything to help spur the economy along. You just don't see it.
What about another one that's always looming? After you say Ukraine and Hamas and the border, somewhere in there people are worried about China all the time, both sides, left, right, up, down. Everybody's worried about looming war with China or confrontations with China. And at the same time, China's had some real economic upheavals themselves. What was it, the big housing company that went bankrupt?
Yeah, well, look, their economy's not doing well, and so
And does that have a ripple effect? Because for a long time it did the other way. As China boomed, the world boomed. As China's stumbling or stalling, particularly in their housing.
Yeah, if you have the two biggest manufacturers in the world not really producing 100% output of where they should, then you can understand that the demand, A, is probably not there, and then B, it's just a ripple effect all the way across the board. And so I don't think that there's any aspect of the economy that someone would look at and go, well, we're doing well in this, right? Now,
Yeah.
I mean, now I'll correct that with, you look at the stock market, you look at the Dow, you look at the S&P, and you would say, hey, gee, we are almost at the all-time high. Or in the case of the Dow, you're there, right? I mean, so
it's bucking all these trends, all these worries, all these concerns.
Right, but you still have 200-point, 400-point, 500-point swings in the market. It's a very volatile market. So, I think people are used to it. I watched that movie Wall Street with Michael Douglas and Charlie Sheen the other night for a few minutes, although I've seen it like 100 times. And you talk about the day on Wall Street when it crashed, right, in the 80s. And the market tanked 500 points. I mean, today's world, it's just no big deal. You'd be like, all right, well, tomorrow it'll come back 300 or 400 points. I mean, it's crazy how it could have those kinds of swings.
We've learned to live with this kind of volatility, this uncertainty.
Yeah, I don't think you're going to see a change. I mean,
So you guys are basing your calculations in the coming year and the next 5 years. Do you think a year out? Do you think 5 years out? Do you just think market cycle?
Well, I don't know about you guys. I can't speak for other people. Look, I take it day to day. And certainly guys that are land banking, certainly guys that are looking further out, they may be on a 2 or a 5 year cycle. The difficulty is for people that are underwriting real estate deals, if we come back to the real estate market, whether it's commercial, residential, retail, whatever, you're looking at development, you're looking at an acquisition, you're looking at a value add. It's very difficult to make something pencil with today's markets because you have limited loan dollars from the bank. You have yesterday's cap rates that people are holding on to. You have not seen the prices drop dramatically. They've dropped some, but not enough, in my opinion. And then you have brokers that are pitching deals going, well, you could do this if you did this, this, and this. And then I'm like, I'm not buying on a shoulda, woulda, coulda.
Right.
Those days are over. And at the same time, I had a conversation with somebody over the weekend, and he said, well, I'm getting 5 or 5.5% on my money in the bank. Why would I buy a real estate deal where on its best day I would get 5% and I have all the risk and the exposure and the liability and everything else? So I just better off go and play golf or watch Montel on TV or something. I don't know. So
Montel, is he still on TV?
He is, but I think it's more commercials than.
Okay,
I always liked him. Anyway, so let's go back. I wanna touch on some of the other topics.
A lot of economists, a lot of mayors. I'll tell you the one that struck my mind was Tony Strickland, probably the most controversial mayor in Orange County these days, mayor of Huntington Beach, running on this platform that growth is, we're not going to change the character of Huntington Beach and put up high rises and do all these things that affordable housing, high rises, density. He seems to be trying to.
Well, he tells it how it is. There's no doubt about that. He's not holding back, and he's no fan of the governor. and vice versa, I think.
But even some of the other Republicans, I don't think it went on air. I won't call them out, but a couple of them said off air, like, love Tony, but hey, you can't stop progress. You can't stop change.
Well, he would be the right end of the spectrum, for sure. And the fact of the matter is he doesn't want a lot of that stuff in his city. And it's interesting that we had mayors from a lot of different walks of life, from different sizes of cities here in Orange County and elsewhere throughout Southern California. Just
San Clemente, San Juan Capistrano.
I mean, look, Newport Beach. We had former mayor of Anaheim. We had the
Lake Forest,
Costa Mesa, Lake Forest. I got to look at my list here.
Yorba Linda,
Cathedral City, La Quinta, out in the desert, San Clemente, San Juan Capistrano, Yorba Linda, Laguna Hills, right? And so
we've had them all.
We did a focus on the Coachella Valley and the growth out there, which has been dramatic. And has now started to cool.
And you're heavily invested out there. You were kind of a counter when people said that's never going to take off. That's just too far away, too few people, too much of a seasonal thing. You really went big in that market.
Yeah, well, now you've seen some corrections out there. You have this huge influx from Los Angeles and Orange County and other parts of the country to the desert, so that it's more of a permanent lifestyle as opposed to I go there for the weekend or for a week to get away.
Right.
And it went so hard so fast that it really put a jolt on the housing market, and it put a jolt on the residential market. And now I think that that's cooled off with the interest rates and with the demand and just a lot less activity, just like everywhere, people not really moving around so much. And so they have their struggles in terms of growth, but you also have huge developments out there like the Disney development and new hotels and new housing projects, both on the apartment side and on the residential side. They're continuing to grow there.
Where's the Disney? That's where it used to be the Sunnylands or whatever.
Yeah, so it used to be the part of the Annenberg estate, and right. So they're looking at selling entry-level homes and townhouses and things for $2 million or whatever the case is, and we'll see if they get it when it comes, and it's coming. So it's exciting stuff out there. And then you switch to some of the smaller communities that historically were bedroom communities in South Orange County that really now are, from what I took from those conversations with those mayors, trying to balance the quality of life with the growth, with the commercial development, with this pressure from the state to try and build affordable housing. And try and manage that within their city. And some of these smaller cities is a very difficult, challenging thing to do, to appease not only your current residents, but then also allow the city to have some sort of moderate growth and not get out of control. And so, each city's got its own things that it's dealing with, whether it's homelessness, whether it's development, whether it's, trying to manage their open spaces. And it'll be interesting to see how that goes going forward. And
that seems to be the big one that everybody talks about. A lot of the mayors talked about affordability, affordable housing, and not just for poor people, but for what we used to call middle-class people. I mean, where do the workers of the world live?
I think you combine Orange County in the same sentence as affordable housing. Those are tough to push together.
Yeah.
Because it is an expensive place to live. And so I was in Las Vegas last week. And gas was in the $3 range, right? $3.50, something like that. And then I come home and it's in the $5 to $5.50 range, and that's just one, barometer in terms of measuring cost of living.
Right.
So, but you look at some of the bigger cities in Orange County. We've had the mayors of Santa Ana and Anaheim and Yorba Linda and some of these bigger cities in Central and North Orange County, and they're dealing with the same things but different dynamic, right? Bigger population. Increase in crime and issues with public safety and cleanliness and improvements of their streets.
And other than Huntington Beach, most of them seem to have kind of begrudgingly accepted that we got to do something. For a long time, many of these cities, Yorba or whatever, said, no, we like the character of the community. We're going to keep it exactly the way. Big yards, big houses, old-fashioned suburban feel to it. And that's just hard to maintain when the land is so valuable. There's still people who want to live here. It's still growth. It's kind of busting at the seams a little bit.
Well, and it's a push-pull because if I don't have new affordable housing, then I have to stick with the housing inventory that I have. And so from a renter's perspective, if there still are not a lot of places for people to move, then you're just sort of stuck doing what you're doing. And then when there is new development, if it's free market development, it will be expensive because the cost of construction is expensive and the developer has to get his money back at the end of the day. So we're not creating a bunch of new opportunities for affordable housing. I think in 2024, it'll be interesting to see on the residential and the apartment market from a rental perspective, if the economy stays soft, are there more opportunities? I see in our own portfolio tenants go shopping around,
Right.
whereas a year ago they just sort of said, hey, I know the market's tight, there's no place for me to go. Now at least they're saying, hey, I need time, I want to go look around, I want to see what's out there. And in many instances they just come back and go, look, there's nothing out there, or there's nothing that gets me what I want for the money I want to spend that's any better, and so I just stay.
And that was the other one I think surprised everybody at the beginning of last year. You're all waiting for the rent moratoriums to finally lift. The COVID thing that was keeping many people afloat and keeping them from paying rents for a year or two or whatever. And so everybody said that day's going to come. There's a reckoning, and the city of LA kept pushing it off because they were afraid that there was going to be just suddenly a huge rush of people kicked out of their homes because they had paid for a long period of time. Some of that's happened, but I don't feel the sense of rent Armageddon that everybody thought was coming here. Tons of people are going to be out on the street.
No, but and you also don't see, the rental market, in a complete tanking mode. But I do think that you've seen the rents flatten, and then you've seen the increases taper off a bit. And in Los Angeles, which is just a mess, and they have continued, rent control and continued delayed processes for people who don't pay in terms of evictions. And so it's still just a horrible challenge to try and manage that in the city and in many parts of the county of Los Angeles. So that'll be an interesting one. And we had a number of guests from a number of large apartment owners, value add guys, developers, Jerry Fink from Orange County and Mike Orwitz from Los Angeles, that were guests talking about those respective markets. And I think the consensus that we got from the residential and the apartment guys we're looking for opportunities. They're just few and far between. And in the meantime, we're going to shore up what we have going on our own end, and then we're going to wait patiently because they think there's better opportunities out there going forward.
Yet surprisingly, few of your guests said, I'm giving up on Southern California, at least for a while. I'm going elsewhere. I'm going to Tennessee. We've all heard these other boom markets, Texas, Tennessee, whatever. Not many of the people who came in on this show said, I'm going there. The one exception was Ed Lee, who one of the co-founders of Yahoo Fish Tacos. And as they're looking at their growth plans for the coming year, it really is more Texas and some other markets. They're not growing their store count here the same way they are in some other states.
Well, and I think if you gave somebody an apples to apples choice, I could live, work, do business in A, Texas, B, Florida, C, California, D,
Right.
Colorado. I think that you would find that somebody who didn't have the beach and the weather as the absolute end all would put California very low on its list. Number one, because the barrier to entry. Number two, the cost of doing business. And number three, there's just a lot of restrictions. Now, contrast that with somebody who's already here, who
Right.
says, no, I'm not leaving, right? I mean, I only leave unless there's just some massive reason for me to be able to do that, or you're Elon Musk and you just can, right? But other people are here because they have family here, because they have roots here, because they enjoy the weather, because they enjoy the beach, and it is a very dynamic economy. And at the end of the day, there's no question California real estate's going to go up more than every place else, right? And so, but you look at Northern California and you look at what's happened there in terms of the value of commercial real estate and rents, and they have massive swings. When it's good, the .com went to the .bomb. It went from awesome to just miserable,
Right.
And you've got some similar stuff going on there. Here, it's not tied to Silicon Valley, but at the same time, you had the Hollywood strike, put a pinch on everybody. You'd think that would put a pinch on people's spending habits because they didn't have money to spend because they weren't working. And for those people directly impacted, I'm sure it did, but it didn't tank the economy, did it?
No.
So,
And everybody still says at the end of the day, whether they like doing business in California, don't most seem to say, I don't, yet they don't leave. They don't give up on it. They still say at the end of the day, I'm still betting it's going to be better down the road, and it's going to grow better than other parts of the country. So it still is a strong economy. It still has a strong upside to it. It's just frustrating right now.
yeah.
I'll tell you what else is interesting to me. We'll end with a couple of minutes here. You had just a couple of shows. Maybe we can do some more in the coming year. what does technology offer us? Are there new game-changing ways to build homes, new game-changing things out there that will increase the bottom line, like the guy you had on from Electrolink? Is that really are apartment owners and commercial centers going to be the new gas stations? Are they going to be ones powering all these EVs and profiting from it?
There's no question that that is a trend and that it's here to stay. So I think things like that. I mean, we had the folks on from Dwellsy, which is software development and technology for the residential and the apartment market. And there's no question that the evolution of technology, whether it's physical or whether it's software or web-based, is going to advance everything that's going on. So I think in the coming year, for our viewers and our listeners out there, in terms of what to expect, I think it's more of the same. It's an election year, so we are talking with and working on a number of politicians. You
even had a guy who was running for president.
We had someone running for president last year. We had somebody who was running for governor.
Right.
And I think we're going to see more of those people want to come in and share their thoughts and ideas with us, and I'm happy to hear it and listen and soak it up. At the same time, we're going to continue to bring in not only real estate leaders in the community, but also CEOs and business leaders talking about their business, their growth, their challenges, and what they see in the economy, because they're in it on a daily basis. And they are reacting to the things like interest rates, to unemployment, to housing restrictions, and that stuff all impacts a business owner.
I'm excited to see that you finally got at least one bank. I know it's been hard. One of our off the air comments is, why can't we get more banks to come in and talk to us on this show? And you're kind of saying they don't really want to talk because they really know what to say right now here. Banks have been kind of in a quiet mode here, but you've got the chairman of Commerce West Bank coming in,
and we are talking to some other folks, and they're, I think, more open and receptive to come in and talk now about what the future holds for banking and commercial lending.
A year or so ago, you had the chairman of Farmers and Merchant Bank come in here.
We've had a number of the banks come in. I think that I read something again this morning when I was getting ready to come here. Wells Fargo announced that they're going to lay off 5% of their workforce between now and the end of the year.
Wow.
And it's really just a fat cutting, trimming of excess people and duplicated jobs. And they said that part of the problem is they've had really low turnover. Why? Because I think that no different than any other industry, people are out there, employees are out there looking for a job. They're looking for more money. They're looking for closer to home. They're looking for better opportunity. And if they can't find it, then they don't leave where they're at. And so you don't have this massive amount of turnover of people bailing on their job like you had when COVID started, or if there's new startups, there really aren't. And so people stick around, and then the CEO who comes along and says, hey, we just got too many people here, we're going to trim it. And so the 5 largest banks in the United States all announced that they were going to have major cuts shortly, to really just shore up excess duplicated effort. And so those people are going to be looking for jobs, and it'll be interesting to see if that causes some ripple effect in terms of pay, people's desire to go to work or not.
Yeah. Well, banks, I look forward to more banks. You're starting the year off big with a good one here locally. I look forward to seeing more technology talks, plays like the guy that came in here and talked from Nile Homes about concrete homes, tilt-up homes like they do for commercial. Why not? It's fire resistant, it's faster and easier to crank these things up. Somebody's got to break the log jam. Somebody's got to figure out a way. Here's a new direction. Here's a new technology. Here's a new plan to shake things up, and then I think everybody will follow.
And I think we're going to continue to focus on the basic sectors of the commercial real estate market, and we'll have folks in here from the office sector, from the industrial sector, retail, multifamily, medical, certainly residential. We'll keep our finger on the pulse of what's going on there, and those are all things that sort of feed into it. So, the year ahead, excited in terms of the opportunities for the guests that we have coming in here. I'm excited to continue to keep talking about what's happening. I am, cautiously optimistic that there's going to be some kind of a change, but the flip side of it is we may see no dramatic change until after whatever happens with the election.
I think that's from the beginning. If I was going to bet money, I think it's more of the same. It's more uncertainty, up, down, choppy waters ahead, as everybody, there is no clear signal ahead. That's what I see.
No, and look, at the moment, we're still too far away from the election, and there's just too many moving pieces. I mean, is it Biden? Is it Newsom? Is it DeSantis? Is it Trump? Is it anybody else? So anything could happen. Somebody could go to jail. Somebody could, not be around for it. And,
right.
I don't wish anybody ill will, but I mean, who knows?
You
right?
got two aged people leading right now here, and not to wish either of them poor health, but things can happen at that age here.
Yeah. So if you watch CNN, you get pulled in one direction. You watch Fox, you get pulled in a different direction. And at the end of the day, we're all just in a wait and see mode.
That's why I listen to Let's Talk Real Estate, because I want to get the no BS.
Right. No BS. We're not making it up. Well, we are making some of it, but we try to make it up with at least a little bit.
Well,
of
they got to listen. We're the final act is yet to play out on this economy here. We don't know what the next trend will be for how long it'll last. We used to have these periods where we go through an expansion for 3 or 4 or 5 years, and then we'd have a contraction, and we have these long kind of cycles. Cycles happen quicker and more dramatic, and we bounce back quicker. We fall faster. All sorts. It seems to be more chaotic.
Look, over the years, I've seen cycles of real estate up and down and in the middle. What is bad for the real estate market as a whole is no change, right?
Yeah,
when it is stagnant and there's low transaction volume and people don't know where to go or how to react, then that's the problem. And if you don't know if the market was going to be hotter, people would buy, they would get off the fence, they would do whatever they're doing. If they felt the market was tanking, they would at least get out there and
sell,
make offers or sell or do something. When you're stuck in the middle in this hold, it really puts a damper on everything, and it really cuts the transaction volume. So for 2024, I think the hot buttons we're going to continue to watch are interest rates. We'll see as we lead up to the election, certainly what happens with economic policy as a whole.
Right.
But I also, and then there's always the wild card of war and terror, and we have no idea what that does
the unexpected.
To any of us.
The black swans that used to only come in 1,000 years, and they seem to come every few years now.
Yeah, but the stuff that that we want to continue to watch is you want to watch employment, you want to watch housing, and you want to watch interest rates, and then you want to watch whether banks are really going to get out there and lend more or ease up, and some of them just can't. Right, they're not able to do that based on whatever restrictions they have either internally or from the government. And at the same time, they're worried they don't want to make bad loans. So it's going to be a challenge. It's going to be interesting. You guys got to come back and keep watching.
That's the only gotta I know. We keep thinking something's got to break, something's got to happen. The only thing I know is you got to keep listening, because this has not played out yet. This is still very much up in the air which direction things are going here, and what. It'd be fascinating to come back and look 5 years from now and say, what did we expect and what did really happen out of this?
Well, that's why we record these things. Then we can look back and go, gee.
Wow, we're a genius.
Or what the heck was he talking about there, right? So, but if nothing else, keep tuning in. We will keep talking about it. If it's happening out there, we will discuss it. We appreciate everybody who has joined us throughout the year, listeners, viewers. Paul, I want to thank you and all the staff here.
I want to thank you for doing an outstanding job. You've gotten a who's who of commercial real estate people, from the economists, as you said, to mayors and public policy people, to people on the front edge of cutting things like technology and affordable housing, and banks and developers and everybody. It's been a who's who. It's been an amazing ride. I appreciate the show a great deal. I know the audience does too.
And if it's Tuesday, we'll be here. So for everyone here at OC Talk Radio, I'm Barry Saywitz, president of the Saywitz Company. Thanks for tuning in and listening in.
Happy holidays.
Happy holidays to everyone, and we will see you back here talking more real estate.
Well, there you have it. You've been listening to Let's Talk Real Estate, your weekly BS with Barry Saywitz about the current state of the real commercial real estate market right here in Southern California. On Orange County's only community radio station, OC Talk Radio, streaming live from our studio here at the University of California Irvine's Beale Applied Innovation Center.